Hello! Today I thought I would talk about paying less tax legally. Now, I talked about this over on TikTok and it was really popular and people really liked the information. So I thought, why not flesh this out, give you a few extra bits of information and give you some more ways to pay less tax. So welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup and today I'm going to show you some ways that you can pay less tax. Now, I am not in the business of encouraging people to not pay tax when they should be paying tax. So all of the things that I'm sharing here today are government initiatives and schemes that are designed to help people get more out of their money. So this is not a tax avoidance scheme. This is not going to get you in any trouble. These are all things that you will have heard of or are out there in the world and you are encouraged to be using. So little disclaimer, I'm not a financial advisor. This is for educational purposes. You may want to seek professional advice about your situation. It might be that some of these options work for some people and they may not work for others. So you need to have a conversation, do your research and find out if these are a good strategy for you. I'm also going to talk a bit about investing, and I want you to remember that with investing, your money can go up and it can go down. So there are risks involved with that. So make decisions that are based on your circumstances and with the right information. So I think all of us understand the importance of paying tax. It's the money that goes towards funding these hugely important public services. So things like our NHS, our transportation systems, our civil service, our military. It pays for social housing and benefits and all these things that we need to support our community. But for a lot of us, we want to make sure that we're not overpaying or we're not paying more than we have to. And there are some good systems in place that enable you to pay a little less tax on the money that you make. So today I'm going to share some of these with you. Now, there are lots of things that you can do to pay less tax, and there are some things that do exist that you shouldn't do, and these are tax avoidance schemes. So if you've got an accountant and they're suggesting dodgy, somewhat really contrived ideas, then that might be balancing on the edge into tax evasion. And it's these sort of schemes that the government are looking to crack down. That's not what I'm showing you today though. These are available to the average person and anybody can have access to these. And it's just a way of putting a little bit of cash back into your bank account. So the first one then is ISAs. So ISAs are this kind of tax-free wrapper that you can put around your savings and investments. Now, this means that any money that you make on money that you have in ISAs is tax-free. So you can get savings accounts that are ISAs, so we generally call these cash ISAs. Then you can get stocks and shares ISAs. There are also lifetime ISAs that come in cash and stocks and shares versions. And then there's another slightly more interesting ISA that's called an innovative finance ISA. So there are these four main types of ISAs and any money that you pay into them is tax-free. Now there is a limit on how much money you can put into your ISAs and that is £20,000 per tax year. Now that £20,000 covers all the different types of ISAs. So you could put £10,000 into a cash ISA and £10,000 into a stocks and shares ISA, but the total of the two must not exceed £20,000. Now lifetime ISAs, as a note, also have their own limit and that's £4,000 per year. So the way that you will pay less tax by having these is because you won't need to pay things like capital gains tax, you won't need to pay any tax on any interest you make or any growth that you get in your investment accounts or savings accounts. So rather than saving or investing your money through general savings accounts or general investment accounts where you would have to pay tax on those earnings, with ISAs you do not have to do that. So it's a great way to save and invest money without having to pay tax. Number two is paying into a pension. So when you pay into a pension, you will be entitled to tax relief. So this is the government giving you some of your tax back and putting that money into your pension pot. So you can get at least 25% of whatever you put in added to your pot in the form of tax relief. So this means if you put £80 into your pension pot, the government will give you 25% of that, which is £20, and put that into your pension pot as well. So that means that if you put £80 in, you will end up with a total of £100 in your pension pot. So if you're a higher rate taxpayer, there's also additional tax relief that you can get. But the basic is 25% and you get that automatically. Now this includes whether you are paying into a workplace pension or if you're paying into a personal pension. And it's just one way of getting that money back. It feels like you're not getting that money now, but you are getting that money in the future. And when you pay into a pension, if it's a defined contribution pension, so this means it's invested, then you will get that tax and it will grow over time as well, providing your investments do well. So number 3 is for people that are married. So there is marriage allowance. So if you and your partner are married and one of you is earning below the personal allowance threshold, so this is at the moment it's £12,500. I think it's going up to £12,570 in the new tax year. Then if you are earning below that threshold, then you can give some of your personal allowance to your partner. Now, this can be really helpful if you've been furloughed or if you've been made redundant and you found yourself earning less than that personal allowance limit this year. You could give that to your partner and they could pay less tax. So you can transfer £1,250 of your personal allowance to your partner, which could potentially save you £250 in tax per year. Now, there are some rules about this, obviously, and it has to be something that is gifted. So it's the lower earner that gifts their allowance to their partner. Obviously, if they then start earning over that amount, then that won't apply anymore. So you just need to make sure that's something that is suitable for your circumstance. Another great example when this might be helpful is if you are on maternity leave and your money is reduced for a year or so, you might find yourself paying less in one particular year, and then that's something you can do to reduce the amount of tax you pay in that year. Number 4 is to take advantage of the dividend allowances. Now, if you're investing into dividend paying stocks and shares, so this is where you invest in a company and then they pay some of their profits back to the shareholders. And this is called a dividend, so it's a form of income. Now, typically you have to pay tax on that, but there is an allowance that comes with dividends, and this is £2,000 per tax year. So this means that for the first £2,000 that you earn in dividends, you don't have to pay any money in tax on that. So it might be something that you want to consider when looking at your investment portfolio, is to think about how you could take advantage of that. You might want to maybe use your stocks and shares ISA to then invest in stocks that are working on a growth portfolio, and then look at investing in dividends elsewhere and taking advantage of that £2,000 allowance. Now, like I said, this is not advice, so this is just something you might want to consider or a question that you might want to ask a financial advisor. And number 5, this one is for families. So this is tax-free childcare. So with tax-free childcare, you could get up to £500 every 3 months back per child. So this equates to 25% of whatever you are paying for childcare. So let's say you are paying £400 for childcare, you could get 25% of that back in the form of tax-free childcare. Now, the great thing about this is that you can also combine this with the 30 free hours that some children get a nursery area each, and this means that you can pay any additional hours with the tax-free childcare. So it's a great way to get some of that tax you are paying and use that towards your childcare costs. They can be really expensive, so kind of like every little helps when it comes to that particular expense in a family budget. Now, you can do this online, you can go to the government website to apply for that, and all the details are there. So see if it's something that you could save some money on, particularly if you are working, you need access to that money. It's a great way to help, and it means that you're not paying as much tax. So I hope I've given you some food for thought on this particular topic. There are lots of strategies and schemes out there. Have a look, see which ones are going to work for you. And like I say, if you need any extra guidance on this, I'm sure there is a financial advisor that will be able to help. Thank you for watching this video. Make sure you come and check me out on my other platforms. I would love to have you there, and feel free to leave a comment and let me know what you think. Don't forget to hit that subscribe button, and I'll see you in the next video. Bye.